Hi, welcome everybody. Thank you all for joining us today on today's webinar. It's a pleasure to have you all with us. I'm looking forward to the conversation. By way of introduction, I'm David Markley. I work on the business solutions team here at Algorand. Thrilled to be facilitating the discussion around CBDCs and the future of financial infrastructure. Before we get started, a few housekeeping items. Real quick, I'd like to just remind everyone that throughout the session, you are invited to ask questions by submitting them in the questions pane on the control panel. You can send in questions at any time during the presentation, and then at the end or throughout, we'll try and sprinkle them in there and get reactions from the rest of the panelists. And so without further ado, I'd just like to get us rolling here, and we'll start with a round of introductions. So Peter, why don't you go ahead, introduce yourself, and then we'll go to Co-Pierre, and then finally Pietro.
Okay, thanks, David. I'm working as Chief Economist at SFB Technologies, together with the Marshall Islands government and Algorand. And my goal is to make the dream of the first legal tender currency a reality. And I'm convinced we can make it. Before that current assignment, I was serving as Secretary General of the Bank for International Settlements.
Yeah, hi everybody. My name is Co-Pierre. I'm a professor at the University of Cape Town, where I'm the course convener for our Masters in Financial Technology. I've done a lot of work with central banks over the years, and I have a part-time position at Bundesbank, but I need to emphasize that when I'm speaking here, I'm speaking out of my own positions, and the views that I express are not those of Bundesbank, the Eurosystem, or the ECB. I've worked with Algorand for quite a while now on different CBDC projects, and I'm very excited to be part of this. I'm also on the Economic Advisory Committee for the Algorand Foundation.
Pietro Grassano, I'm Business Solution Director for Europe within Algorand, so I work closely with David and Co-Pierre on very different type of use cases, among which the central bank digital currencies as well. Beforehand, I was responsible for the French office of a prominent asset manager.
Great. So I think it goes without saying that pretty much everybody on this panel is more qualified than I am to be talking about any of these topics in great detail. So looking forward to diving into the questions here and really fleshing out, some of these topics, certainly as CBDCs have gotten or gained a little more mainstream adoption. So for everyone's reference, this is going to be a pretty open Q&A. We're going to start with a list of questions that we've got from the panelists and from other attendees. And so without further ado, Pietro, we'll throw the first one over to you. From your perspective, with your experience across a number of different banking institutions, financial organizations, et cetera, why now are we starting to see this trend of blockchain, CBDC, and what do you think are the main reasons that central banks are looking more closely at these opportunities?
Absolutely. I think there are two questions in your question. One is why CBDC, and the other one is why blockchain, right? And actually, yeah, it's absolutely true. I saw a paper recently saying that 70% of the central banks in the world are evaluating CBDC with different models, and therefore, if there are different models, I suspect there are different reasons as well, right? So Sweden is something, China is something else, Cambodia is something else again, Marshall Islands is probably a fourth reason. So of course, I mean, there are 11 ways to cook an egg. There are many models to deploy a central bank digital currency. You have models that are more related to wholesale, interbank settlement, other ones that are more related to a retail digital currency. Then you have hybrid models with a role in between the central bank and the citizen for commercial banks. So the reasons can absolutely vary. One big category is cost and efficiency, in my opinion. The cost of the payment system for the society. We know that the current international payment system is based on an end of the day net kind of settlement, while today's technology allows to have a real-time gross settlement with the implicit cost savings that this might have. There is another element which is in the same category, cost and efficiency, the ease of deployment of the monetary policy. Think of the logics of helicopter money in the current situation with AIDS deployment, right? The second big category, I think, is financial inclusions. We had some situations in some of the emerging markets of interest for central bank digital currency in order to have financial inclusions going beyond the traditional system intermediated by commercial banks. And I think that this is particularly relevant. It's not just for emerging markets, it's going to become more and more relevant and then become a single driver of adoption also in developed countries. The third element, which I would not understate, is the need to protect or create a form of monetary sovereignty, right? The Marshall Island case is one of them. We all know about the China experiment. The China experiment is actually an experiment to go for a competition with an international payment system based on the dollar, right? We need to be aware of that. And the other element of protection of the monetary sovereignty is the potential threat created by global stable coins. Of course, Libra is an example, it's not the only one. Of course, with global stable coins having an important dimension, the mechanism of reserves could, at a certain point, create some prejudice to the monetary policy tools that central banks have. Why blockchain on the other end, right? Well, I think that it's not a case that the Bitcoin and the crisis of 07-08 started at the same time. They obliged all of us to think again somehow the nature of money in its various elements, mean of exchange, unit of measure for value, store for value. And blockchain actually represents a good compromise, a good balance between the privacy characteristics of cash on one end and the security characteristics on the other end that are typical of deposits. So in between cash and deposits, you might think of a CBDC blockchain based. That's it.
That's great. That's great. Thanks, Pietro. You mentioned that 70% of central banks around the world are starting to look at this in one form or another. And obviously, you outlined that there's a number of reasons why any one of these would take advantage of potentially a CBDC and gain benefits of efficiency. But Peter, I'd like to ask you a little more specifically. The Marshall Islands has been making some big waves here, certainly as an early mover, early adopter. And I just wonder, if you could speak to some background of how the Marshall Islands came to make this decision, and then also, what really resonated for them. What were the kind of key decision factors?
Well, I would say rather the blockchain came actually to the Marshall Islands in the way of SFB, our company. We presented the idea of a sovereign digital currency to the government. And as you may know, the Marshall Islands, it's not a centrally located country. It's a small country at the end of the world, and they are facing existential challenges. Among them is being washed away by the rising sea levels, and they are among the first. So for them, everything that can help meet these challenges actually rings a bell. And so we discussed the opportunities and risks first with the government, but then also with the parliament. They had a day-long session. It's a very basic democracy. One has to realize that in our democracies with the large countries, people are actually quite removed from the political process and often see the government as, well, something to be avoided or to be bypassed. Over there, the government is part of the system, and the people actually have an impact on the government in a day-to-day basis. So we had a day-long discussion in the parliament, broadcast live to everyone. And there were questions coming in, a little bit like sort of a webinar. There were questions coming in, people can turn up in the government. And I think what probably rang a bell is that the Marshallese is a sharing economy, not a capitalistic society the way we know it, where everything is run by money and everything is determined by finances. Over there, it's the sharing, and I think the idea that our currency, the currency based on the blockchain there, would be distributed to the people, and not just the currency itself, but also the senior rich income later that is coming from this currency would be distributed equally to all the currency holders, a little bit like universal basic income. And I think those concepts really they resonate over there. And in the end, the Parliament voted a law that makes the new blockchain currency legal tender in the Marshall Islands.
Excellent, great. Thank you, Peter, for sharing your insight there on what is really moving the needle for the Marshall Islands and why they endeavored on this project. And Co-Pierre, taking a little bit, shifting back to the macro perspective here, what do you believe are the broad economic implications of a successfully launched and adopted CBDC? What do you see as it being, just beyond fiat? Does it have other sort of, monetary policy implications? Pietro mentioned China and, kind of what they're endeavoring to do as a global financial instrument. Would love your perspective on that.
Cool. So in my mind, that we need to distinguish between benefits from a central bank perspective and benefits for the broader public. The two are not always exactly the same. So in many countries, cash is easy to handle, it's easily accessible. In other countries, it's not. In an emerging market context, cash is difficult to get to. You sometimes have to travel large distances to get to an ATM. It is dangerous to have. You actually do get mugged at ATMs or when you walk home. And the benefits of moving this digital sort of are an immediate sort of safety and convenience benefit for users. That's one thing. I think that's going to be a big driver because cash has a lot of other downsides that digital currencies don't have. The biggest problem that we face with digital payments and digital currencies broadly is adoption. One way to overcome the adoption issue is to say, well, we officially, as a government, we endorse a new payment channel, just as we have endorsed digital payments 50 years back, when sort of the first computer systems were deployed, when the old sort of more paper-based payment system was moved into a fully digital payment system on the back end. So I see this as just a very natural evolution of how payment systems and the means of payments have been changing. There's a lot of things that you can do with the digital currency that you cannot do with cash or even with electronic legal tender because of the decentralized nature. And it goes for me to one of the sort of most important and not very much talked about points of what is important about blockchain for a central bank digital currency. So let me make this point, which is very, I think, a fundamentally important point. It is about the question of ownership. A central bank digital currency like cash, so notes, coins, and electronic legal tender have to be on the liability side of the central bank. They are not an asset of the central bank. So that means it is a claim that someone has on the central bank. If you operate a central database, a central store of data, the owner of this database becomes the owner of the entries because he has the ability to change all the entries in this database. So if you operate a centralized database to record the ledger of a country, whoever operates the centralized ledger would become automatically the owner of all the digital tokens representing your currency. So that means it's an asset. So that means that in order to actually operate a central bank digital currency, to do it in a way that is consistent with our accounting, with our existing legal framework, you have to resort to a blockchain, to a decentralized system where there is not a single controller of that ledger. So that when you do that and when you set up a system like this, you get a lot of benefits for the core mandate of central banks as well. And that's what they really care about. So it's not even financial inclusion that is included in the mandate of most central banks. It is price stability, financial stability. In some countries, you have sort of other mandates like employment, but it's generally we care about price stability and financial stability. So how can a CBDC help you achieve price stability? For one, you have a much larger part of the economy that you can include in your measures of economic activity. At the moment, we have a large part of our economy that is continuously growing, which is purely digital. Value creation happening in the digital space that is not easy to account for in traditional measures. So a lot of the prices that we see are not necessarily reflective of the prices that we have in the digital economy. If you have a currency and a payment system, a means of exchange that sort of underpins this new digital economy, you can actually much better target a part of our economy that is continuously growing. For the past 10, 15 years, the digital economy has always grown faster than the real economy. It is an increasingly important part of our economy. So if you only care about price stability, prices speaking economic truth, then I think you need to be aware that there's this big part which we are currently blind to where CBDC can help. Similarly, for financial stability, we've seen in 2007, 2008, one of the big issues was the lack of trust among financial intermediaries. And why did that arise? Well, because we had assets that were opaque, that couldn't be easily publicly audited, and we had contracts where counterparties could easily back out from. With a blockchain as a commitment device, you actually can overcome this issue. So you can write sort of more complete contracts, which in turn makes a financial system more stable. So even if you just care about the core things central banks care about, you will be better off with a CBDC, not as your sort of your one solution to fit every purpose. There's a role for cash. There's a role for electronic legal tender. But as the digital economy grows, I think the imperative to move to a CBDC will increase over time.
That's great. Thank you. I'm trying to weave in, one of the questions that we just got in from the audience here. Co-Pierre, you talked a lot about, how even if you just care about, the fundamentals, the metrics that CBDCs can, help advance in the right direction. One of the things that has largely been talked about in the cryptocurrency space, at least, is the usability. And so we know that users have to manage their own digital signing keys. That often leads to some complication or some inability to access their assets. So when it comes to a CBDC, is there a way that we can make this user experience, essentially better? Can we streamline the ability to access this? Are there other companies? Are there partners? And maybe Pietro, since you've spent a lot of time talking with other partners at all in the space, maybe you can take a first pass at it. And then Peter, I know your company is certainly, this is something that's top of mind for kind of anyone who's trying to tackle this problem. And so maybe Pietro and then Peter can add on.
I would say that at a certain point, the element of recreate trust. I mean, there was recently a poll among millennials, right? On which is the level of trust that millennials have towards centralized financial institutions. And 90%, 90 of them, had no trust at all towards centralized financial institutions, okay? And I'm absolutely in the field of those that think that this is too much, that this is exaggerated, but it's telling something, that the speed of adoption of what is possible in the realm of technology is quicker among certain parts of the society, and of course those that have some sort of vested interest in the status quo, by definition, are gonna more reluctant to leave the status quo. Okay, so I think it's perfectly understandable, perfectly normal, but I mean, talking to three segments of counterparties, let's say innovative startups on one end, governmental entities and central bank on the other end, and in the middle, the big enterprises, what I see is a strange sort of barbell in which governments are actually leading the way for the reasons that we were mentioning before, and also Co-Pierre mentioned before. There are smart, smaller companies and startups that get a new business model made possible by the new situation, and actually the legacy system overall is a little bit more reluctant, a little bit more slow in the adoption, because they wait for the government to lead the way, the regulation to lead the way, and so on and so forth. In the meantime, of course, they feel the competitive pressure of small enterprises. I would say that the argument that works best is actually the one that has to do with the fact that they have already been there. They've already moved from paper to digital. They already had, I mean, some of those institutions are there since 350 years. They have been showing certain ability to adapt, and they will do it again.
Got it. So to kind of wind it back, you know, the macro statement that you're making here is that effectively there is a demand for a new way of operating. And, you know, initially, while we might have some usability concerns and there might be some barriers to entry, you know, there are companies that are actively solving that problem. You mentioned some of the innovative startups. Certainly, MPC wallets have been top of mind for everyone that's been looking at how to solve the usability challenges of managing keys. But your basic statement is that there is a demand to shift the model, and we think that that's most likely going to overcome, and innovative startups are going to support that movement along the way. It's basically a way to kind of round it out. Is that accurate?
Absolutely.
And Peter, I know certainly from an identity side, there's a whole nother set of complications that have to be layered on when you talk about managing identity in conjunction with managing keys. You know, how are you guys thinking about streamlining kind of that user experience and that ease of use for people that want to take advantage of a central bank digital currency or this platform in general?
I think that's a very good question, and I think it's very high on our mind. What one really has to come to grips with is that all the startups and all the things that are happening, they may have fantastic technology, they may have great ideas, but for them to work as a financial technology, they need to interface with the financial system. I mean, it's we have seen lots of coins developed, very clever ones, extremely clever ones, but they haven't have made any impact. And I think the key thing, if you want to make an impact, is you need to interface with the existing financial system, because that is where the bulk of the customers are and where the bulk of the financial agents are. And I think this is where we are coming from, saying that for a digital currency to be widely accepted, it has to be acceptable by the current financial system. And the easiest way of doing that is actually to issue a kind of CBDC issued by an official actor. May not be the most trusted actor currently, but it must be issued by one of those actors. And by the Marshall Islands, actually, they are trying to do this. But it's not the standard fiat type currency that they are issuing. They are actually trying to do something that appeals to a lot of people, that is to give this currency a backbone that makes it immune to manipulation by politicians. So the currency, monetary currency rule is pretty, let's say, primitive. It grows on a constant 4% every year, grows the monetary stock of that currency, which means, yes, you have some variability, but you know it's not going to be inflated away. There won't be QE, there won't be QE1, QE2, there won't be negative interest rates. So it gives some trust to this currency. And in order to make this trust really effective, this currency will also have a unique identity behind it that makes sure that, for example, a person using that currency is not on an OFAC list. If people who are on an OFAC list or something similar can use that type of currency, it's not going to be acceptable and you're not going to make an impact. And I think all those working on this type of currencies are slowly, and you can look at Libra, for example, they are coming slowly to grips with the fact that in order to be acceptable, you have to play enough by the current rules that the others accept you.
That's I think that's a very timely point that you made, Peter. Effectively, we have to get the foundation right. If we don't get it integrated, if we don't make it something that works within kind of the existing frameworks, this, pie in the sky reality that we all, dream about, it will actually just never be fully realized. And so to kind of paraphrase, get the basics right, make sure that it fits within the existing framework, and then we can start to build more innovative, more streamlined systems from there. There are a ton of questions coming in, so I'm just going to kind of hop over there. So this one, Pietro and then Copierre would love to kind of expand on top of it. But Pietro, first and foremost, or actually, Peter, you can weigh in. This one's for everyone. All right, we'll let everybody weigh in here. Why did the Marshall Islands choose Algorand? And Peter, I know you've been intimately involved with the project and evaluating different platforms. Pietro, I know you and I have been involved in helping make the case for Algorand and our platform. And Copierre, I know that we've talked about Algorand and its applicability in many different formats, whether retail or wholesale designs. And so for the Marshall Islands, Peter, maybe we'll do a short fire session here around the horn. Why did Marshall Islands and SFB Tech choose Algorand?
Okay, that's a simple question. Thank you. First, Algorand is ideally suited for a digital currency. Whether it's for the Marshall Islands or someone else, doesn't really matter, because it's among the fastest and safest blockchain technologies around. But crucially for the Marshall Islands, it does not rely on proof of work. And it would be schizophrenic for an island economy threatened by climate change to use a currency that contributes to global warming. So being a currency that is consistent with their ecological footprint and objective, and that is fast, efficient, and safe, there are not that many of those out there. So Algorand was an easy choice.
And Copierre, we've certainly talked about many different designs, whether it's a public or a private instance or some hybrid leveraging the Algorand platform. Would you say that beyond kind of the Marshall Islands, are there any other benefits of kind of leveraging the Algorand platform in your opinion?
Yeah, there's a pure technological advantages. You want something that is highly scalable, and for retail CBDCs, we actually did the computation at one point, sort of trying to figure out how many transactions per second do you actually need if people seriously start using your platform for settlement, like to buy groceries, to pay each other, right, like small amounts, and you very quickly reach a realm where sort of only Algorand and very, very few others can compete. So that in itself is, for me, that's like a technological advantage. What is more important even is sort of the whole approach to how do we design a socioeconomic system. It's not purely the tech, and that's like we can decide on whatever tech we want. We can design new tech if we have to. It's about the philosophy for designing these systems. Do you make it open and inclusive, or do you make it closed? And so one thing that I always like about working with Algorand is this, that everybody has this sort of spirit of, we try to create an open ecosystem where we bring in the right actor, where we enable innovation for others. And I think that is a very important ingredient in something that requires mass adoption, because different countries, different situations require different solutions. If you have centralized planner, where one big company tries to solve everything, chances are they will not solve, the niche solutions that will get you to where you need to be in order to have mass adoption. And I think that's like this open approach is very, very powerful, and it cannot be overstated, the importance of connecting so many different ecosystem players. And we can talk a bit later about sort of the different projects that we've done and sort of how we designed this, but I found it a very powerful driver to be able to rope in various different actors with very different mindsets and say, look, there's this overarching technology that can combine like your system with your system that achieves this common goal that many people share. That I found to be the most powerful driver.
I will only add, on completely different scale, a more technical element, which is the fact that we provide a platform that makes tokenization so easy and allows truly atomic swaps that have, for instance, for a wholesale central bank digital currency, an immediate positive impact in terms of minimizing the counterparty risk, and therefore this could have very important fallouts in terms of the reserves you need to put in face of that counterparty risk, the regulatory capital that needs to be absorbed, right? So this is probably less general statement. It's referred to wholesale CBDC, but still holds.
Looking here through the questions again, this is an interesting philosophical question. What are your thoughts on a negative yielding CBDC? Do you see CBDCs as a threat to the legacy commercial banking model? Peter, I feel like you've spent quite a bit of time thinking about the design here. Why don't you go ahead and give us your thoughts on a negative yielding CBDC?
That's a very interesting question. Actually, in Europe, you may know that we are not just experiencing negative interest rates, obviously not in cash, but we are experiencing negative interest rates up to 30 years government paper. And obviously that creates a lot of problems for a lot of people, mentioning pension funds, just to mention the most important one. Now, CBDCs, they have the potential to delink the long-term bond market from the digital cash, and that will make it more doable than today to change the interest rates on a digital currency if it is designed to do that. Now, in the Marshall Islands, we don't want to do this. We want to steer clear of that. But if a central bank wants to be able to actually go into very negative territory on a digital currency, it can be designed to do that without impacting the bond markets, the long-term savings and investment decisions. So depending on how it is designed, it opens that possibility. And if you have read, for example, Paul Krugman, he has done quite a bit of work on this. He has published a full book. And one of his arguments for a digital currency and doing away with cash is exactly that one could actually put negative interest rates on the payments that are done in the grocery store and if you buy a car. Now, I'm not a great fan of this personally, but this goes more into economic issues that I think we're probably not discussing here in depth.
It's an interesting point, and I think if I was to just take a step back from, if I'm an enterprise or a government institution looking at potentially implementing this technology and weighing what the benefits are, one of the things I think has really resonated, at least as we've been talking to these entities, is that if you don't have a blockchain protocol, if you don't have this capability in your technology stack or in your quiver, you just simply can't implement these types of models with the speed and efficiency that others who may integrate and have this capability are able to do. And so, Peter, when you talk about opening the possibilities, you have that slider, so to speak, where you can move from something that's fully decentralized and then have varying levels of decentralization added in, where you can share kind of the controls, you can share the levers, you can do these types of experiments on smaller scales. So I think that's an interesting point, is that these types of things become much easierly implemented, if that's even a word, become much more easy to implement if you have the platform and the technology available. Switching gears again, so there's a question here. Broadly, I'm going to distill it because it's fairly long. Let's talk about privacy. So how do these two ideas kind of run into each other? We have this blockchain, which brings transparency, auditability. Copier, you talked about how it can bring a lot of value in a lot of these transactions where they weren't audible and you couldn't really understand what was happening behind the scenes. And so how does that marry or essentially sit against people and monitoring their transactions? And what are some of the techniques you've seen employed at Algorand or otherwise to help mitigate those concerns? And Copier, we'll start with you, and then Pietro, you can layer in.
Yeah, cool. So that's a really good question. Privacy is one of the very hard ones. So I've been part of several working groups with different central banks designing like calls for RFPs for CBDCs in order to sort of get the central banks ready. And when we had these discussions internally, there are always two things that are sort of the big problems that we are aware of. One is the usability issue, and it's not just usability from can you actually use a simple app on your phone? Can you recover your keys? No, it goes into what happens if one of the parties doesn't have a phone or a smartphone. How can you create digital payments for users with feature phones only, which in emerging markets, South Africa, for example, we have 55% of our population who doesn't have a smartphone, full stop. And that's like, we are even one of the countries with a high smartphone penetration globally. So majority of people does not have smartphones. How do you provide simple payment channels for USSD and feature phones, or even without a phone? That is sort of one of the really hard problems that you need to solve if you want to get mass adoption. The second one is privacy. And privacy is like, there's privacy preserving blockchains that you can use. You can implement solutions on top of an existing blockchain. If it's scalable, it's easier than if it's slow. So there are ways through that. The real hard problem is that central bankers like cash because it is privacy preserving. There is a big understanding of the value of privacy and as a means of resiliency against the state. The state should not know who you transact with, and central bankers are usually the ones that advocate this. At the same time, there's existing regulation for larger value payments regarding know your customer, anti-money laundering. So what you need is not just privacy. You need to have privacy until a certain level, and then you need transparency and auditability. And having both together is, even to date, I think, is a very hard problem that is not fully solved. You can do a couple of solutions on top of a highly scalable blockchain to help with that. But the privacy issue for me is even harder than the usability issue. And there is so if anybody is working on privacy topics, I think that's a day well spent.
If I may, somehow not exactly echo 100% what Copier says, but I'm fully within with the importance of the problem, if you want, but it's already a problem in the current system, right? So with on one hand deposits, on the other hand cash is perfectly anonymous, but of course they can steal my wallet out of the ATM. Deposits are safer, but of course they can find me whenever they want, right? So it's already there. It's before thinking of blockchain. If ever, blockchain can become a platform that allows the ability to program until which level you want the AML, KYC working well, and under which level this is not important. So to me, it's probably a tool that can allow to balance those two interests. They are very important interests and have to be balanced somehow.
Well, just one addition. I mean, we have faced this problem quite prominently when working on this currency for the Marshall Islands. And just as a little aside, the US Treasury actually was very, very insistent that the currency that the Marshall Islands would issue adheres to best practice standards set by FATF and the national regulations in the US. And that includes know your customer, anti-money laundering, sanction screening, and so on. And we have spent a lot of energy in making sure that we can actually do this while preserving the privacy for day-to-day transactions.
Yeah.
Can I maybe add something on the question that we had just before, which I think was a very important one regarding the banks and the future of banking with the CBDC? And I'll make it quick. I think there is sort of this narrative that fintech companies and crypto is a threat to banks, but I don't think that's exactly the case. The real threat to banks comes from big tech. Within the BIS, there were sort of several forums and discussions where the question was big tech versus fintech. And should we maybe call it tech fin for some of these players? And I always thought it's a bit of a silly discussion, but there's a real hard truth in it, and that is The main reason why Facebook, Google, Apple, Amazon haven't moved into finance is not because they can't do it, it's because it's not worth their time. The margins in finance are too small for these guys. They make much bigger margins in tech. But there are actors like Facebook with Libra, like Amazon with their credit to merchants on their platform, that are making big strides into finance. And this, I think, is an existential threat for banks. I was on a panel with somebody from JP Morgan last year, where I asked a simple question. So JP Morgan is a nice, reputable bank as far as reputable banks go. So they launched JP Morgan Coin to experiment internally with liquidity transfers within the bank. So I asked her, how do you plan to compete with a company that has 2.4 billion customers and more cash than you have market cap? And the answer was just a complete silence. There is no answer that the banks have found to date to how they react to that threat. What we see is a big unbundling of banking services. Everything used to be together in one institution, a bunch of different services within one house. That is becoming unbundled. Payment systems are moving out. Loan provision is moving out. It becomes more market-based finance. For everything that you single out of a bank, you will have startups and big tech companies that can do it better. In fact, because of the data advantage that big tech has over finance, they can do it much better, much better than anything that the banks could offer. So how do you actually, what is the role of banks? And I see a CBDC as a major enabling tools for banks to reinvent themselves, to provide identity services, to find new means of business, of serving their customers in a world where the benefits they enjoy through the bundling does no longer exist. Because of technology, it's possible to unbundle the banking institution as such, and they don't have a good answer yet. And I think a CBDC is one of the ingredients that we need in order to have sort of a future for banks as such. Otherwise, you just have a very different system, which is much more market-based, much more sort of big tech companies with large data advantages playing a crucial role. And whether this system is fairer, more open, more transparent, and better for customers, I have serious doubts.
I mean, I would take the opportunity to ask a question that might be a very controversial one, right? Going back to the question to JP Morgan with no answer, the question I would have is, would we trust a big tech company being virtually a global monopolist to solve our privacy versus money laundering problem?
You can, that question answers itself. There needs to be a separation of identity and data and sort of the people who manage that. It shouldn't be in the same hand, and at the moment it is. And I think this like the undercurrent that we are seeing in different tech innovations at the moment that spill directly into the banking world. That is where it comes from. And I think the technology that blockchain provides, I think that is an important ingredient into getting a new balance.
Absolutely.
And I think that is important, a new balance between users, data owners, data processors. That is something where only, so if you have good government infrastructure that is scalable, that is reliable, that is tested, that is integrated, that is interoperable, only this will get you to a world where you can create this new kind of consensus between the different actors in the system.
Exactly. Where you own a private key, the institution owns another one, and there is a balance between the two. So,
yeah,
absolutely great.
We have covered a ton of ground today. We're running out of time. Unfortunately, I wish we had more time to keep going deeper into these topics. We've talked about central bank digital currencies, the primary goals and objectives of these institutions, the impact that these platforms can have on global markets, on efficiencies within interbank transfers, the implications that it has on identity, on the ability to retain privacy. And then there's been a host of other questions relating to kind of tangentially DeFi and other segments that kind of all surround this space, and how those startups may or may not be disintermediated if a central bank digital currency comes out. Unfortunately, we don't have the time to get through all of the questions. So looking forward to doing another talk, another roundtable with you guys in the near future, where we can continue to peel this back. But I think the last question, we'll make a fairly short wrap up and then head over to some polls. And please, everybody that's in attendance, check out the survey that we will be sending out. We use it to gain better insights on how we can make these events better and just get more information from our audience at large. So last question here to round us out. I think what's on everybody's mind is, when are we going to see somebody actually launch one of these things, right? I know we've all been in discussions around, the reality of bringing these things to market. Peter, we'll start with the Marshall Islands, since that's near and dear to your efforts and your focus. And so again, you don't have to reveal too many specifics, but it would be great to get a sense of, what your expectation is for when it goes live. And then Kopierre, Pietro, we can kind of provide a high-level guidance on when we think the rest of the world is going to follow the Marshall Islands lead. Peter, to you first.
I think we are going to start actually auctioning of pre-solves right to the solve in the very near future. And we would hope then that if that is successful, obviously, and that depends on everyone in the market, that we would go live around 18 months later. Maybe just so that's the broad outline for the Marshall Islands. Concerning the big central banks, just two remarks. I think for most major central banks, they're all working on it. I would expect that in the next 2 years, we don't see a CBDC by a major central banks launched. Simply the downside risks, they are all trying to figure out what they are, but the upside potential is not huge for most of them. Now, the exception for that may be those countries that find that the SWIFT system is being used by geopolitical considerations by the US to actually enforce sanctions. And for those countries, and China in particular, there may be a lot of driving force in bringing out a digital currency that can be used to underpin domestic payments, but also international payments, in particular within the Belts and Roads initiative that China is running between Asia and Europe. So if my best guess is China will lead the way, and I hope the Marshall Islands will be close with China or maybe even faster.
Great, thank you, Peter. And then Kopierre, I know you certainly have done a lot of work in thinking and framing out how the central bank digital currencies will come to fruition. In your perspective, is that timing more or less accurate in your opinion? Do you think we'll see some adoption in smaller, more kind of forward-thinking countries as Peter, or is China going to be the kind of first in front for the foreseeable future?
I think China is going to be first. Like the discussions I had with people at the PBOC tell me that they are ready to launch any day. Like if they wanted, they could have launched. So it's a political decision when they launch, how they launch. My guess is it will start either in specific provinces or even cities with a pilot to actually test the system in a real world scenario, and then it's just going to be scaled up within months across the country. I think they're going to be first. There are other countries that are trailing. I think Sweden should be watched for what they are doing. I think their technology, so their design process is good, but I'm not sure whether they have a much more closed loop kind of approach to it with a closed system, centralized. I'm not sure that this is going to turn out to be so efficient. So this is something I'm watching with great interest. Wishing them the best, but I have doubts that this closed system can actually provide the innovative benefits that they are hoping for. There have been successful pilots all over the world. For wholesale CBDCs, we had that in South Africa. We had a fantastic pilot, ran the entire payment system on a permissioned blockchain. So in Canada, you had that. All over the world, you had pilots doing things like that. After a pilot phase, there is an evaluation phase. For retail, I think it's like the 2 years are reasonable to see that there is going to be pressure for some countries. And the way I watch this is which country has the highest cost of cash. South Africa pays 25% of our cash in circulation annually to keep it in circulation. That is huge. The cost of cash is very high in some countries, and they will be the ones, I think, that push for retail CBDC first.
Excellent. Pietro?
Listen, I will give my forecast as well. I think that in the next 12 months, we might see China going ahead. And again, as somehow copied a little before, I'm not sure if it's important who goes first. I'm pretty sure it's important which will be the model. As we said before, right? The various models, the various ways to cook an egg. I think that the best model is what is going to be important. The best model will win in terms, the best model in terms of inclusiveness, respectfulness, the most cognizant of the fact that, of course, we are talking also about financial stability. It's not just about innovation and so on and so forth. The most legitimate, because at the end of the day, we are talking about an institution. So what is actually an intersubjective, imaginary reality, right? Therefore, the best model will win.
Well, I'd like to thank everybody who's been on the screen sharing thoughts and insights. I'd like to thank everybody behind the scenes who hasn't been on the screen that helped pull this together. Everyone across marketing and PR who has been help orchestrating the event. Want to thank the audience. We want to share the insights with all of you ultimately. So thank you all for attending. Thanks for submitting your questions. We will certainly do our best to follow up, post a lot of this content over the next following weeks. And so we will endeavor to hopefully answer your questions offline. Please give us feedback. Please let us know what you'd like to hear more about, other topics that are top of mind, and we'll do our best to keep giving you the content that you're looking for. Without further ado, I think to close out, we'll just real quick, how you can get in contact with people. So if you want to get in contact with Algorand, you can email myself, david.markley@algorand.com, or Pietro, following the same email signature. Co-Pierre, if people want to get in touch with you, or are you trying to stay off the grid these days?
Oh, no, it's okay. co-pierre.georg@UCTAC. Just Google, and then you'll find my email address is on my website.
Perfect. Google him. He's got a website. That's more than I can say about myself. And then Peter, what's the best way to get in contact with you?
Well, you can just email me at peter@sov.global, or you check out my website. You check Arcandide, ARCNANDIDE, and there you find all the ways.
Thank you all so much. It was a real pleasure, and looking forward to doing it again in the near future.